Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is November 13, 2019. And today is Wednesday morning. So looking at the major economic events of the day, starting out at 11:30 this morning out of United Kingdom, we have a yearly CPI number coming out. This is an important number. It could shake and rattle the GDP. We're going to take a look at a couple of scenarios there. And then later this afternoon, out of the United States, core monthly CPI number coming out. And then this evening at 6 p.m., we had Fed Chairman Powell will be testifying in front of Congress. That's an important event as to some of the economic policy and the interest rate decisions that he's had. But looking at the markets of late, the euro and the British pound have been really flat. Maybe today we'll shake things up. Looking at the Canadian dollar weakened versus the US dollar, we're going to take a look at a couple of thresholds there. Now looking at the Dow Jones, it sold off from its all-time highs yesterday, about 100 points. But the question is it going to come right back, okay? Or is it going to just trend or trickle down, okay? There's a couple of scenarios there. We'll take a look at that as well. And looking at the commodities, gold bounces off support as the Dow Jones sold off. While oil sells off just mildly, but may look like it's actually building some momentum there, as that has been trading together with the Dow Jones as well. Now, lastly, looking at the stocks, the rotation continues. This time it was Microsoft that took us to all-time highs yesterday after JP Morgan and Apple have been rotating, okay? They've been the ones that have been taking us, and so yesterday it was Microsoft. But let's take a look at the markets and see what we can expect from today's trade. So we're jumping here into the GBP USD at a 4-hour chart. You can see we've been pretty much flatlined right here, okay? At this 128.60-ish level, we're about 20 pips away from that at 128.32-ish level. But you got to know your thresholds when this number comes out, okay? This is your resistance level at 129. Your support level is 127.60-ish level, and we're smack in the middle of that, okay? Which means there's no directional move right now which way this number will actually come out. So, a couple of scenarios. If we trade to one of these two thresholds, the resistance or support, and we bounce off of it, we may see a correctional move on the upside. However, if we do break one of these thresholds, we may see a new trend actually developing. So keep that in mind. I'm more certain to think that we're going to sell off than we're going to rally, but you never know. Okay, so just keep your options open there. Now looking at the Canadian dollar versus the US dollar, okay, anytime this graph goes up, it means the Canadian dollar is getting weaker. Anytime it goes down, it means the US dollar is getting weaker. Okay, so very important to understand that on this graph, because sometimes it's very confusing. All right, now before we've had a lot of contention in this area, and we're right hitting that right now at this 132.50-ish level. If we break above this, okay, with some momentum, we could definitely see it go back to the 133 and the Canadian dollar weaken the USD. Okay, with that said, just keep in mind there may be a correctional move here on the downside. So with that said, just keep your options open, all right? Because this could go either way today, and it's kind of a tricky trade. But keep it open because the momentum has been there, and anytime oil has gotten weaker, the Canadian dollar has gotten weaker, and they kind of play catch-up. Now, when we're looking at oil, we're going to just jump in that right now. We've had this consolidation here at this resistance-ish area of 57.40, and we're just right back down to this 56.58. Now, you know, albeit we're not making lower lows, we're not breaking down, but if this does build some momentum on the downside, we could definitely see it back in this $55 range, okay? It's been relatively a mild winter in the northern hemisphere, so there hasn't been as much consumption of oil, okay? So with that said, just keep it in mind as we go into today's session. Now looking at gold. Now this was the spot yesterday. Now this has been in a downwards momentum trend, okay, ever since we hit 1513, and really because the Dow Jones has gotten stronger. However, with yesterday's mild correctional move, I'll call it, in the Dow Jones, we see that it's actually bouncing off of this 1448-ish level right here. So it could be a dead cat bounce, okay, which means the following thing. If we look at a daily chart, if we do break this 1448-ish again, we could see it further break down, okay? So it may test this area, it may just trade within this range, but you got to look at the Dow Jones component as well when you're trading this, okay? And nothing is trading by itself anymore, okay? It seems like, you know, one is going and then affecting the next thing, and it surely is. It's intermarket analysis of what is going on in the markets. Now, looking at that Dow Jones, we're just about 100 points off of our all-time highs. Now we're looking at a daily chart, and the reason I brought up a daily chart is just to give you a perspective of how far up we've gone over since last December 24th. Okay, this is December 24th last year, excuse me, and we're here at 27,000-ish area, 7,700, okay, which is over 6,000 points of a rally in 1 year. Okay, now albeit, we were in a recessionary fear environment a year ago, doesn't seem to be the case right now. And so what you're looking for, okay, in the markets is to give you that confirmation is that the stocks remain strong. So yesterday we saw Microsoft remain strong, okay, it broke it to its all-time highs yesterday to 146-ish, okay, from its 144-ish level, finally breaking that resistance. Okay, so far we've had a gap, a consolidation here, and then a go. All right, so with that said, if it does continue this momentum, we could see it continue even higher to maybe $150 a share. Now, some of the other major components did take a day off yesterday, if you want to call it that. JP Morgan sold off a little bit from 130.50 to 129. When we look at Apple, also taking a little bit of a day off yesterday, not doing much, not trading much, but you could see that the general momentum is still up. Nothing has changed the momentum. Facebook had a nice little rally yesterday. Okay, if it does break above this 197-ish level, it may really come back and be one of the stocks that is carrying us higher, but so far it hasn't. Okay, so again, there hasn't been like something that is breaking down and showing me weakness that I should say, okay, maybe the Dow Jones is going to correct itself. But it's a little bit of a play of who's the leader, who's the lagger right now. Okay, sometimes it seems to be that the Dow is leading the market, sometimes it seems to be that the stocks are leading the market, and everything is just being catch up, either vice versa. So with that said, just be a little bit cautious at these areas, as we may still see some volatility around these areas. This is Fred Razak. I want to wish you guys a great trading day.